Welcome back to Beyond the Headline, everyone. It's a very exciting and beneficial day to be on the show because I'm here with the founder and CEO of Female Funders, Katherine Hague. Katherine, thank you for being here.
Thanks so much for having me.
I'd love to start out with your personal inspiration to start Female Funders. It's a really special story.
Yeah, so Female Funders officially launched at the end of August 2015, and it launched originally as just a blog that profiles women that have been actively angel investing. And all of this really started because early 2015, I started angel investing myself. I had started a tech startup back in 2011, made possible by my first angel investor, a good friend of mine. She put $10,000 into the company. And once we had exited the company in 2013, I knew I wanted to start giving back and angel investing myself. So I started writing some angel investing checks only to realize that the gender gap in angel investors was far worse than I was expecting. I took part in one round where there were 70 angel investors, and before writing my check, there was only one other woman in the round. And just looking at that and realizing that this is sort of a deal that had gone through kind of an old boys network. The who's who of the community were in it, but basically it seemed like all women were excluded. And it felt like women were missing out on this incredible opportunity to be able to get into these social networks, to learn about new industries, to meet with incredible people. And how could we tell women about this opportunity and make it seem more relatable? So I started talking to lots of women in the community, and there were often a lot of misconceptions. Either people thought that they didn't have the right background to be able to angel invest, or they thought angel investment checks were way bigger than they actually are, or they thought that, without other people, investing alongside them, they wouldn't know how to find any deals. And all of these things can be overcome. And I thought if I could capture some stories of women that have done it, we could make it seem like something that's possible. So we launched it at the end of August with the goal of getting 1,000 women to make their first angel investment. Today, we've had over 1,000 women sign up. Now my goal is to make sure that those women convert to angel investors by the end of the year. And one of the other big things that was part of this getting started is I took the 500 Startups VC Unlocked course last May, which they actually managed to have 50% women, 50% men take part in. And it was meeting with those women and feeling their passion and energy and their support of the project that I think really got it off the ground.
You mentioned some misconceptions, too, that a lot of individuals were facing about making angel investments. What's the one that really sticks out to you?
Well, I think this is actually one that Joanne Wilson talks about a lot. She was at a conference and she said a couple women came up to her and they were sort of humming and hawing about, can I actually afford to write this angel check? And what she asked them was, how much did you spend on your Christmas vacation? And all of a sudden they thought about it, and this angel check was going to be less than they spent on a vacation. And all of a sudden that sort of puts it in perspective that we're already spending discretionary income for a lot of people on things that aren't going to have a long-term impact on us or the rest of the world. And we could take some of that money and really have a significant social impact. And I think once you start framing it in that way, the check doesn't seem as intimidating anymore. It seems like you're, buying your way into this learning opportunity.
I love that. And then on the other end of it, you have younger individuals, both men and women, who are eager to angel invest, but certainly aren't spending that much on vacations. What can people my age and around this age do to start learning about angel investing?
Yeah, so right now there's a lot of legislation around who can actually angel invest put out by the SEC. Generally, a good rule of thumb is that only accredited investors can angel invest. There are many exceptions to this, but by and large, the only people that can be marketed to, say through Angel List or Seed Invest or Funders Club, are people that are accredited investors, meaning they have over $200,000 in annual income or over $300,000 in annual income with a spouse, or they have a net worth over $1 million. And this is in the US, but very similar legislation exists around the world. And this was generally thought to protect investors. The thought was that people that meet accredited investor standards can sort of afford to lose the money in these very, very high risk investments. But there's been a lot of changes happening in that, especially with crowdfunding. So right now you can go on crowdfunding, Kickstarter, Indiegogo, and you can, back a project, but you're not going to get any equity in that. You're going to get a product sent to you. But waves have been sort of moving, and it looks like over the course of the next few months, in small amounts on equity crowdfunding platforms, non-accredited investors will actually be able to start taking part in some of these deals. Which it's sort of unknown what the implications are going to be of that on the overall funding market. But to your point, I think that participating in small amounts in some of these deals for, younger people that are just getting started, $1,000 maybe, so you can actually follow the course of a company. You can learn about what happens behind the scenes. You can feel like you own a piece of a winery, whatever it might be, right? And I think that that's how we'll sort of get the training wheels for the next generation of angel investors.
I love that, and I think it's so important, specifically with what you're doing with female funders, because the number of opportunities now to get involved in startups is great, and like you said, it's increasing. However, when you do get started and you're not familiar with the industry, there's a lot of words, there's a lot of legal things that kind of go in one ear, out the other, because you just don't even know how to define them. And that's where you guys come in. Can you run us through what you're teaching individuals about being an angel investor?
Yeah, so on our site, we now have all of the interviews that we have out there. We also have a glossary about angel investing where we take all of the key terms in angel investing and sort of tell you why you actually need to care what these terms are. In addition to a number of different videos that explain things like the difference between accredited and non-accredited investing. We have our Slack group, which allows for open conversations between women in the community. And my goal is to make it a community where you don't feel like you can't ask dumb questions, right? I want people to feel like they can ask anything and they're going to get a real answer. Because I think that most people feel like in other investment communities, it's all about posturing, right? You want to seem smart. You want to seem like you know what's happening. But I think we really need to create this safe environment where you can learn the basics. Because the people that are teaching all these courses, they didn't get there overnight. Many of them have been doing it for decades. And they don't even realize that what's coming out of their mouth is sort of gibberish to someone that's getting started. And if you want to take it the next step, we also have our Angel School, which is now both for investors and entrepreneurs. On the investor side, we have 2 tracks, one for non-accredited investors, one for accredited investors. And in that, we really start at the foundations of what is angel investing, why do angel investors invest, moving up to the more technical side, the mechanics of angel investing, getting into things like convertible notes and priced rounds and cap tables, and explaining what all of these things are from the ground up so that you have the confidence to walk into any meeting, to talk to any entrepreneur and feel like you really have a foundational knowledge of what's happening. And then we get into more of the fun stuff. So your plan, either as an investor or an entrepreneur, we talk about the best practices for venture-backed companies, what investors look for from team to market to product to traction, and then finally what it's actually like to invest.
And as it comes to that investing, you've made some angel investments since you started. What's your experience like as an angel?
Yeah, so my first couple angel investments, I really just stumbled into. One, I invested a very small amount in a friend. This was before I even sold my company. And it was interesting, it was opportunistic. I was like, okay, I'll write a really small check and see what happens. And that company's gone on to do quite well. And my second check was a friend that was like, well, there's this round happening with 70 guys. Like, we need more women. And I'm like, okay, well, that sounds like a good enough reason to get involved. And I'd known the founder for quite some time, liked the business, but for me, it was almost more important that I wanted to, make a statement about the gender balance. And since those first 2 investments, I've actually become a little bit smarter about this, I hope. It's when I started actually educating myself about, what is it that I actually want to invest in. And now I'm really focusing on only investing in female founders. I think that there's incredible opportunities among female founders right now, mostly because they're often overlooked by traditional funding in the venture capital world. Only 2.7% of venture capital goes to female CEOs. So I think there's a great arbitrage opportunity, but also being a female founder myself, I want to change those numbers, and I think that I can be a part of it through investing. So my next 2 investments were in female founders. and looking right now to actually make an investment in one of the graduating companies from our angel school as well. And our angel school is definitely for both men and women, but it's been entirely women so far. So really looking to sort of continue on that path.
And as you focus on the gender diversity aspect of things, one of the things that you mentioned at the Female Funders Breakfast in LA is that when you look up angel investors in New York, you have to get to page 10 before you find a woman.
Yes. And I think that, so I was talking to AngelList, and I think the number is about 9% of their investors are women, which is lower than the overall rates. It's about 25% women if you look at overall angel investing. But AngelList, I think, is more representative of tech angel investing. And beyond this, I don't have the stats from AngelList, but I think that the women on AngelList in that 9% are also less active, which means that when everything gets sorted, not only are there less of them, but they have less social capital on the platforms. So imagine as a female founder going to somewhere like AngelList and using this as a way to put together your investor pipeline, and there's no one there like you. And I think that it's not necessarily that men have a conscious bias against female founders. I think just we as humans tend to relate better to people like us. The conversation goes better, it's more fun, you enjoy spending time together more, it's just easier. And that's for no other reason than just human psychology. And investment is so personal that I think if your first meeting is awkward or doesn't feel right, that might just have to do with the fact that you're not very alike. Whereas, if you meet with someone who went to the same university as you, they're the same age as you, they're the same gender as you, they look like you, that conversation is probably going to feel really natural. And all of a sudden, that deal seems better. Everything about it seems better. Women, I also think, tend to be a little bit more modest. And they talk about their metrics and their traction quite humbly and almost sort of underplay their success. Whereas I think a lot of men sort of overplay their success and their traction. When you think about, if men are overplaying it and women are underplaying it, it looks like this massive gap between the two companies. So you put these things together and all of a sudden, it starts to make sense why the numbers are what they are.
I think it's really important that you mentioned investments as being very personal, because a lot of times, especially in the early days when you're doing your best to just scrappily make it, you would think you'll just take money when you see it. And I've had a lot of friends who have done that and it has ended very poorly. What do you suggest entrepreneurs ask and know about their angel investors?
Yeah, so I think that before you even get into conversation, you should know, have they written a check, let's say in the last 6 months? A lot of people will talk about themselves as angel investors, but really they just like positioning themselves in that way, and they might not actually be active check writers. So make sure that the person actively writes checks so you're not wasting your time on that front. Talk to or ask them if you can talk to entrepreneurs that they've worked with in the past, and find out those entrepreneurs' story of what it's been like to work with this investor. Another great question could be, can I talk to one of the founders whose company that you've invested in, whose company failed? Because that person might have a very different story to someone whose company is, growing and doing amazingly well. You want to know what happens when things get bad. So that's really when you're going to have the most tension with your investors. You also want to know about their average check size. You want to know whether they follow on. So do they only invest in the first round, or do they leave some money in there to invest in future rounds with the founders that they back? You can ask about the sectors that they're interested in, how active they are in their involvement with the companies. How often do they expect to be updated? All of these different things will help give you, a more solid picture of the person that's actually going to be investing in you.
And on the entrepreneur side, how fast is that process? So maybe you reach out to an investor, you get connected, you meet, you go through all of these things. How fast does the investment happen?
So I think it's, a lot of people think that it's like Shark Tank, right? Like you go in there and you make a pitch, and very shortly after you find out whether you're getting the investment or not. And the truth is that I think it was Mark Schuster that said, people invest in lines, not dots. So an investor isn't just looking to meet you at a single point in time, decide based on that point in time whether or not they're going to invest. They want to see you here, then they want to see you a month later and 3 months later and see the trajectory of where your company is going. And they want to know, are you the person that lives up to the promises that you made? So you really do actually have to build a relationship. It's almost never that, an investment is, a cold introduction and turns into investment right away. The only times that seems to happen is if you've already, created this trajectory for one influential investor and they pull in their friends who trust that investor. Not necessarily you, but they're trusting their friends' judgment on the company. So those investors might write a check immediately, but you have to get that first lead that's really seen you and trusts you over time. And without that, that trust, it's going to be really hard to kick off the round.
I want to unpack that in two ways. First, when you mentioned finding a lead investor and then they can bring in other investors, can you ever have too many angel investors?
Yes. It's sort of the party round these days, where you have tons of angel investors coming in. It's not innately bad. In some respects, it's nice to feel like that many people want to be a part of the round. But it has a few implications. If you don't have one person writing a fairly substantial check, sometimes when things start going badly, there's no one that's truly invested in your success. You don't have those people really on your side to make it happen. Also, when you go on to raising the next rounds or signing legal paperwork, all of a sudden your cap table has like 70 people on it. And how are you actually going to be able to manage all of those different people, get their signatures for everything? So something that's been really popular on platforms like Funders Club, for example, is the setting up special purpose vehicles. So this is when a company is formed that all of the investors invest in, and then that company invests in your company. So on your cap table, it's only one company investing. So when you need signatures for new rounds and things like that, you only need one signature, as opposed to if all of these people directly invested in you, you'd have to capture every signature every time.
How did you, when you were an entrepreneur, manage your relationships with your investors?
So I had a board of directors, which had my lead investor, myself. My co-founder would sit in on the meetings, and then we had a couple of observers and one seat that wasn't filled until we actually sold the company. And I controlled that third seat. So that was the more formal direction of the company coming from the board of directors. And then my broader network of investors, let's say that there were 15 people on that list, they would get a monthly update. And that's where I would put all of my requests, so introductions I was looking for, updates on the company and our metrics, next steps and things that we were doing. And I found that as long as I was sending out these regular updates, it would really limit the amount of inbound questions that I'd be getting. So I think that that's something that's really important for entrepreneurs, is to find a cadence that works for your investors to keep them updated, so you avoid anxiety on their part and really keep the relationship in good standing. And also so that you can use those relationships. You have all these amazing people. You need to tell them what you need from them.
Did once a month work well for you?
Yeah, I think once a month is probably a pretty decent rule for most companies as they're getting started.
And then how about on your side now as an angel investor? What do you appreciate about entrepreneurs communicating with you?
I really appreciate entrepreneurs that do send updates like that are more proactive about telling me what's happening. It's not even that I'm desperately need to know, but it's always nice to see in your inbox. It's like, oh, cool, like that's what's happening with this company. For earlier entrepreneurs, and maybe it's this first company, if I haven't heard from them in a few weeks, I might send them a text or, depending on a relationship, or an email, and just be like, how are things going? How can I help? And try to be a bit more proactive myself as they're just getting started. But I think that companies that are, more experienced founders tend to, try to take control and not let the investors be the ones dictating the communication, and try to be the ones that control how the communication happens. So
a message to early entrepreneurs then is that your investors do want to hear from you.
Your investors very much do want to hear from you. Not every investor wants to be active
every day.
But at the same time, even people that don't want to be active, they do want to be updated. So I had some investors that were basically totally hands off, but at the same time, if we ever needed anything from them, they were very happy to help. They just weren't going to be, emailing us for updates all the time, and actively or proactively giving introductions or things like that. You will have investors that maybe have amazing domain experience in what you're doing, and they want to be, pretty actively involved. But either way, they want to know what's happening.
That's a really, really critical part. It's something that I've also learned from Joanne Wilson, who says that, you have to know your role, both as an entrepreneur going into it, what does this investor want to do with
Yeah.
our team, but then also as an investor to know that you're not there to run the company.
Yes.
On both of your experience, you're very lucky because you've had the entrepreneurial experience, you have the investor experience. What have you learned about that?
I think that you get to know a lot of different personalities. I've been lucky. I didn't have any investors that thought it was their company or anything, or were trying to override how we were running things. But certainly, it's harder when things aren't as good. Because everyone wants to help, right? It's like crisis time and everyone has an opinion on how you can, get to the next stage. And I think those are the most stressful moments as an entrepreneur. It's just figuring out, okay, how do I take all of this information and come back and sound authoritative and confident in the direction that I want to go? Because really, I think the investors, mostly less experienced ones that are sort of panicking in those moments and trying to give you advice, really, they just want to see that and you have conviction in what you want to do. And when you don't, then that's when sort of the anxiety and panic ensues. So I think that's the hardest thing as an entrepreneur, sort of managing your investors. And then as an investor, I don't have a huge, long track record of investing, so I haven't seen all, timelines of different companies. But I think that it's sort of like running a Kickstarter campaign, actually. When things are going bad, a lot of Kickstarter campaigns go silent. They just don't want to tell anyone what's happening. And actually, the opposite is usually the most helpful. Actually telling people, okay, this just happened, this is how we're tackling it, and then, okay, this just happened, this is what we're going to do next, rather than 6 months later being like, okay, this happened and we weren't able to figure it out. That's what people don't want. Yeah. So make sure that you're more openly communicating, and then everything is a lot easier, and you don't get the same type of anxiety like, oh my God, I don't want to tell my investors this. Just have an open communication policy, and then they won't feel like you were withholding something down the line. And I think that Zirtual is actually a good example of one of these companies. Everyone thought that it was doing amazingly well. Jason Calacanis interviewed the founder 3 days before they shut down, and he had no idea they were about to shut down, and he was one of their investors. And she was really just hoping that she'd figure it out and hoping that she'd find a way to keep it alive. But I'm pretty sure that her investors would have appreciated knowing, even if it wasn't necessarily the best news, as opposed to after the fact being like, okay, what just happened?
So you don't want any bad shocks.
Yeah.
How did your experiences as an entrepreneur, specifically a young entrepreneur, help inform the angel investor that you are and aspire to be?
Well, I try to make decisions quickly. I was part of, trying to raise from a lot of different people and sort of being dragged along, never quite getting the no or the yes. So I try to make decisions relatively quickly and be upfront with entrepreneurs. Sometimes it's hard, but you do your best to just be very clear about how you feel, and so that they can move on, or so that you can actually write the check. And then I try to, much like you were saying, not necessarily try to run the company, but be there as a support. I like being the one people come to first when there's a problem or something's happening, and really just being a little bit more like a friend that's there, that they can help, and even potentially help as they're figuring out, how do you position this to your investors, to your VCs. So yeah, I just want to be someone that you're not afraid to talk to, but that you think could be there and could help.
What lessons have you learned about doing that thus far?
I think it's just a matter of having fairly regular conversation, even if it's a small, short email. I think if you haven't talked to a founder in 6 months, you're probably not the first person they're going to come to with a problem. But if you've had some sort of conversation that's been going on, once a month, you chat in some way, I think that you build up more of a relationship and you feel like someone that's more engaged and that cares about what they're doing. So for me, that's been really important, just to not let any of my investments just sort of, go away and fall to the back of my mind. I want to be, not intrusive, but present, to be able to help.
I love that, and I think it applies to so many things. What areas, I know you mentioned specifically female founders, are you really interested in investing in?
Yeah, so I'm really interested in investing in female founders. I'm not sort of like solely software businesses that I need to invest in. Part of that's because I came from the hardware world, so I also like physical products. But I'd like there to be some tech aspect to what they're doing, whether that's through their online platform, whether it's through the product itself. So it doesn't necessarily need to be just pure software, but there should be something technology related about what they do. I have a bit more of a preference to B2B sales, just because I understand it better. B2C and sort of getting millions and millions of users is something that I don't know much about. So I find it harder to be helpful in those types of companies. Not to say I wouldn't invest, but I definitely think I'm far more useful, and I'm better at judging companies in a B2B space.
That's something that Joanne also mentioned at the Female Funders Breakfast, is it could be an incredible idea, but if you're not equipped to really help someone, it's not as beneficial to invest, because down the road when they do have a question, you're going to have no idea.
Yeah. And I mean, I think that the exception to that, so if it's software, I like B2B software, but physical products, I'm more comfortable with it being consumer, because I understand crowdfunding, I understand retail from my background in the hardware industry. So there, I'm okay with it being a consumer product, but in the software world, I don't really understand mobile app distribution. I don't really understand growth of social networks particularly well. So those wouldn't really be where I would invest.
So I think it really goes back to that big notion of know your role in a lot of different ways.
And know yourself. Yeah. Understand what you're good at, what you're not good at, where you need to ask questions, where you need to bring in help.
So the last one for you, Katherine, that I would love to kind of shift gears from that one is, let's say you and I have a conversation. I'm a founder. I just pitched you my business to make an angel investment. What are you thinking to yourself after our meeting?
Yeah, so I'm thinking, are you someone that I want to meet with again? Are you someone that I would want to work with over time? That's really important, because it is sort of like getting married. There's no way to, stop working together once you've invested. So I think it's really important to enjoy each other's company. And then, am I, really interested in what you're doing from the perspective of, is it something that I haven't really heard before, or are you just parroting, the same pitch that I've heard a million times? Is there something unique about that that's really sticking in my mind? And then, are you the right person to be doing this? Is this just something that you thought of, but you don't necessarily have a particular passion for, or there's nothing in your background that makes you the right person to do this? Or are you uniquely positioned through your connections, through your background, to be the one that makes this big? And then, do you actually have that ambition? Are you already talking about selling this company, in the next couple of years? Or are you talking about making a real big change? What's your level of ambition around this product? So if I come out of the meeting and I really enjoyed the conversation, I think you're doing something that's really unique and I haven't seen before. I see your ambition to make this something big. You're the right person to do this. And then the last thing would be that you've proven it's something people actually want, whether that's through you have a prototype of some sort and some initial customers or some beta testing, but you have some level of traction that shows, yeah, this matters and people care. And I think those are the things that I want to see out of an entrepreneur.
The last one's really important too. I was having a conversation with someone who's also an angel investor, and he was saying, don't come to me if you haven't fed. Don't say you need $300,000 to validate an idea. Go figure out a way to validate it for free or very little.
Yeah, and I think that that's something that's new in the last, let's call it 10 years. It's easier than ever to, build an app in a weekend or prototype something with an Arduino. You can do a lot of things, whether it's hardware or software, without having a lot of money. And crowdfunding makes that possible, but also just running small tests yourself make that possible. And if you haven't shown that you're, scrappy enough to figure that part out, what's to make me think that you're going to be scrappy enough to figure out building a company?
I love it. All right, before we go, what's the best way for everyone to stay up to date with female funders and for angel investors or entrepreneurs who are very interested in trying out the course or just learning more? How can they get in touch?
Yeah, of course. So just head over to femalefunders.com, sign up for our newsletter. We send it out about once a week. Also follow us on Facebook or Twitter, and you can learn about all of our programs online or through our newsletter.
Fantastic. Thank you so much.
Thank you so much for having me.